Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast. Going into January 11th and 12th. Hope everybody's enjoying the weekend. Let's start off with the natural gas. Came off pretty hard again on Friday after failing back below this main line right here. We've been bearish from overall from $8.20.8, and then on a number of other levels in here, but more recently from 1220 December 5th. So this went out warning of pressure from a 528.90 close, and we had a number of other bearish calls in here as well, and we've come off down to 313.10. More recently, I just said that the failure back below 347.90, which was the failure back below this line, warned of pressure. So we came off a bit, pulled back to the line, and dumped. Decent trade back above this formation right here will warrant a decent strength. That's going to come in at 339.50. Plus 1 per hour starting at 6 o'clock p.m. Sunday. Okay, and the crude oil left to maintain gap higher on the day. I'm not going to go over the higher time frame stuff in here. The trade above 57.81 has brought in strength up to 59.77. I'm sorry, let me back up. We held exhaustion below the 54.89 low. We rallied up to 59.77. Also had a bullish call above 57.81. I said the break above 58.69 minus 2.2 of a tick per hour will project this upward $1.10 minimum, 470 plus maximum. And like I said, we've traded up to 59.77. If we fail back down through this line decently, that's going to warrant a decent pressure. That's going to come in at 58.67 minus 0.2 of a tick per hour. And this formation right here will also come in at 58.71. Decent break below that will also warrant a decent pressure. Let me just check one more thing before I go to the next commodity. And the RBOB left to maintain gap higher on the day. I would note, though, that this day in itself warns of possible pressure before / if resuming higher trade, possibly to trade down into this gap, barring any outside influences on that. A maintained gap low in there will leave a minor bearish reversal above. I warned of exhaustion at 167.15 to 675. We held this with a 166.56 low. And we have rallied up to 180.10. I also warned if this is the beginning of a bullish correction, it should exceed 21.5 cents from the 166.56 low, i.e. the minimum target being 188.06. So we're still quite a bit shy of that. And then the trade above 171.22. There are multiple bullish calls from 171.22, 171.66, which projected this upward 4.3 cents minimum, 10.7 cents maximum. Each of those are shaved a little bit, maybe 4 cents to 10, but we've already gotten a good portion of that, like I said, up to 180.10. And then the trade above 172.37 projects this upward 4 cents minimum, 6.7 cents maximum. Trade above 174.78. 176.82, I did say if we fell back down through this decently, though, that'll warrant up decent pressure. So that's going to come in at 176.91 to 733 plus 0.3 of a tick per hour starting at 6 o'clock p.m. In the heating oil, with the maintained gap higher on the day, again, this day also just the way it settled, warns of pressure before / if resuming higher trade, barring news that would affect it other ways. But and if we leave a maintained gap lower on the day, that'll leave a minor bearish reversal above. We have also held exhaustion at 205.06 with a 204.69 low. I said if that starts a bullish correction, the minimum target would be 214.20, which we took out, and we rallied up to 217.36. Trade above 212.74 projects us upward 8.8 cents plus. But like I said, we've only gotten up to 217.38 so far. Decent failure back down below that formation, which is going to come in at 211.96 minus 2.5 per hour, starting at 6 o'clock p.m. That'll warrant decent pressure. The RBOB, a maintained gap lower in there, will leave a minor bearish reversal above. Excuse me, in the Brent, trade above 59.69 has brought in strength up to 63.92 with additional areas to be long above at 60.61, 60.93, 61.23, and 61.95, and 62.31. Decent failure back down below this formation right here, which is going to warrant decent pressure. That's going to come in at 62.36 plus 0.2 of a tick per hour starting at 6 o'clock p.m. And the gas oil, again, warns of pressure down into this gap, possibly, likely, barring other events. Maintain gap lower will leave a minor bearish reversal above. We held exhaustion with the 596.25 low. We had additional areas to be bullish at above at 608 and 615.50, 620.75, which projects us upward $52. So far, we have rallied up to 635.50 and pulled back down to this line. Decent failure back below that line, which is going to warrant a decent pressure. That's going to come in at 623.54. Minus 4 per hour starting at 6 o'clock p.m. And the cadence going into Monday is the heating oil is the weakest, the RBOB in the middle, and the crude the strongest of the three relative to one another. I would also note that if the gas crack gaps lower, that'll leave a minor bearish reversal above. Okay, thank you for watching. Hope you have a good afternoon, and I'll see you on tomorrow's podcast.